Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, August 9th, 2023. We saw a little bit of everything today. It looked like the markets were going to gap higher this morning, and then right before the open, we started seeing selling, and it made it just below right. This is the support area that I've been talking about. That the 45.60 down to the 45.20. This is the important support that the Bears need to push through to get downside momentum really picking up. So we made it here, and then all of a sudden we had a massive buy program, and it looked like they were going to trap everybody. But as soon as we got up to resistance, we saw selling hit again. So we're kind of in this little. It's actually a bullish wedge. Well, there's a couple ways to look at this one. It's you know what? Let's just not even count it. It looks more like a bullish wedge right now because it's coming down and we're getting it's making lower lows, but we're making lower highs. So it is. I'm still anticipating that we're going to get some kind of bounce up to the somewhere up into the 4,500. But if I'm, it wouldn't. I wouldn't be beating myself up if I'm wrong and we don't get it and we head down just because. I believe this market is way, 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 way ahead, like four or 500 points ahead of itself right now. And I gave you my reasoning on it. A lot of people are, banking in that the Fed is done and, it's going to be back to the glory days, but that's not going to happen. And I don't understand why they're singing this song, maybe just to bring money back into the market, but there's, with gasoline, it's one of the things. The oil I've been showing you, and I've been saying this is going back up to 100. It's at 86 right now, oil. So it went from 70 or 68 up to 85 in the past 2 weeks. We have gas that's up almost 25, 30 cents right now. Inflation numbers are going to go up. They're not coming down. The only reason why they came down was that they basically drained our emergency supply of fuel supply. So it's a smoke and mirrors thing, and anybody that really thinks that the Fed's going to start cutting rates. I mean, I'll sit there and say, yeah, they will cut rates, but the thing is, we're probably not going to see a rate cut until we're seeing the S&P probably down at these levels here. You know what I'm saying? So it's a very they're not gonna be lowering rates when the market's up here. If it gets back down to these levels, testing these, yes, then I can see possibly them lowering rates. But the thing is, the economy's going to be in the dumpsters. And so again, this is why me personally, I could be wrong. It will not be the first time, but everything that I'm studying and I'm reading, it's telling me that the Bulls are just leading themselves down a path that's going to be very disappointing because the Fed is not going to start lowering rates. So that's it. So a lot of people are comparing these things to different times, but again, you're comparing times that are apples to oranges because since 2009, you've basically had a Fed that put in something like $9 trillion into the system. That was getting circulated. Money was easy to borrow. Banks were borrowing it for nothing, lending it out. That all stopped. So you're not going to sit there and get away with economic numbers that when you have a market that's 5% within the all-time highs. It's just there's something that's off and it's going to have to fix itself. And in the only two ways that I see it, either we're going to see GDP explode and we start seeing 6-8% GDP growth. Basically impossible with this administration in there. I mean, they just barely got over 2%. I think, so they're going to sit there and claim they had the highest GDP, but all right, yeah, when they opened up the country. So, I mean, a bunch of that stuff is stupid. But my point is this: GDP is not going anywhere. It's not going to get past 3%. It's not even going to get past two. I don't think it maybe 2.1, whatever it is. It's it's going to be down there. So either the market's going to have to come back down because there's no Fed backstopping it, or and that will stop, that will bring down inflation, and then that will also get the Fed out of the equation. But that's it. If the economy has to implode, meaning that it has to go down. That's the only way this ends for the Fed. It doesn't end if the market is going up. That is not a soft landing. This is a launching pad, if anything. So again, I'm on the side that the Bulls, they're going to be set up for disappointment on it. But right now we haven't seen any, major break of support. And you can see right here, these are my line right here, where if this gets taken out, we're probably going to get a very quick move down to the 43.15. And this was the original battle zone right here. So if they can get through it, this is the 43.30, 43.15. This is your the panic line, where if it gets lost, then we're coming down to the 4,200. So on the upside, really what we have to, the Bulls, they're going to have to get it above the 4,500 up to say, let's just go up to here, to 4,520. So this anywhere from the 4,500 up to the 4,520, I would say are really realistic, as far as hurdles that the Bears, that the Bulls really need to get through to get themselves out of harm's way. If they do that before the Bears get in, then we start looking somewhere up at the 45-40. I would still be a little bit reluctant putting new money to work, even though we could come down. I just think the risk is definitely there for the bounce, so I'd be a little bit careful. Hourly chart, you can see we're just really stuck on neutral. We did have some buy signals. They have not done anything. And that's pretty par for the course, because we had sell signals this entire time that were ignored. So let's just see what plays out tomorrow. Enjoy the rest of your night, and I'll talk to you guys in the morning.